Let's start out with August Empire Manufacturing, 25.6, a nice pop from 22.6 at best expectations. Second quarter preliminary non-farm productivity, nice number here, up 2.9, about 0.5% more than we were expecting. A subtle drop off in our last look from 0.4 to 0.3. Unit labor costs move into negative territory. That's a little bit surprising, down 0.9, and that follows an upwardly revised 3.4%. Remember, these are preliminary reads. Now let's get to July retail sales, up 0.5%, better than expectations. If you strip out autos, it moves up 0.6. If you strip out autos and gas, it holds 0.6. And the retail sales group number plugged into other data points is a solid up 0.5%, sequentially following slightly revised from unchanged to down 0.1. These numbers are pretty good. The market, 287, Joe's right. We were toying with 290 yesterday. I think 290 really gets you into less safe harbor ramifications with regard to treasuries. Short end already doing that a bit. 262 in 2 years brings that curve to around 10s to 2s, around 25 basis points or so. Remember, we were hovering slightly over 30 recently. We still have more data points to go. And yes, we're under a little pressure in the equity market, but we're also pretty close to all-time high levels as the world grapples with, to me, the biggest story of the day. Watch the dollar index. It continues to move higher, and that does, of course, give the world a little agita regarding debt denominated in those dollars. Joe, back to you.
Yeah, that's what it's all about. Well, they do have God, though, apparently. They don't have dollars, they have God, Rick. I don't know if that's going to help. Anyway, Steve Liesman has more on the data. They're not asking for a reaction today. They've learned that.
What? What I
the other day it said let's get to Steve's reaction on the data, and he had absolutely no.
I just had to make a face. That's what they wanted, was a face.
Yeah, I wanted a reaction to that. But today you have more.
I have more.
Do you actually have more data, or just more?
I just wanted maybe more specificity, more detail, maybe more minutia, more trivia, more arcana.
Fill in the.
Well, I think the big story here is it's a curious number. This July retail sales number is very good, up 0.5 point better than expectations. But there was a pretty big revision downward from June, or in June. Originally pointed at 0.5, now 0.2. Put it all together, and you have pretty modest, pretty good retail sales growth. And looking at the details, one of the things we're looking at is the auto sector, which is up. Where is the auto sector here? Up 0.2. We had those stories about used car prices rising because maybe newer cars are becoming more expensive. Maybe because
I bought a used car.
You did? What'd you buy?
I just traded in. Ford Explorer.
How old?
It was a 14.
How many miles?
44,000.
Still under warranty?
Yes.
Good. There's value down the chain
interested?
there. No, I'm interested in the trade-off between.
You know what it is? I drive into the city every day. Do I really want a new car that I drive in here?
I hear you.
Thanks.
I hear you. One of the things I was looking for this morning was the effect, if possible, or if at all, of Amazon Prime Day.
Oh, yeah. But how do you see it? Because it's every year. I guess it gets bigger every year.
It's hard to know because you had a 0.8% rise in non-store retailers, and you had 0.7 last month. The J.P. Morgan had a piece this morning saying it's very mixed, that it shows up and it doesn't show up.
Does it pull sales forward? Do people wait, or is this just incremental
Becky,
sales?
You're like ready to be an economic supporter.
No, you know what it is?
Exactly what J.P. says.
You and I used to say, Steve and I used to sit next to each other at the Journal.
We debate retail sales.
He covered the economy, and we would literally debate this every
retail sales. So it looks like there may be some pulling forward. This is a strong number. J.P. Morgan finds very mixed results for Prime Day in July. Definitely has some effect on the numbers. Look, two things we're looking for. One, how flush is the consumer, given that the tax cuts are there? Consumer seems to be doing pretty well. We'll have to see these numbers inflation adjusted. And the second thing, on the other side, we're looking for any tariff effect, and it's not necessarily easy to see right now. You also have a big energy effect in there. Gasoline station sales up 0.8%. So we'll let this thing sort of play itself out. The big number, perhaps, with a capital perhaps right there, is this 2.9% productivity number. if there's an upward shift in productivity, the game is changing. The Fed can just kind of almost go flatline on rates if we're going to have a strong productivity number.
Why?
Because there's non-inflation. You saw the unit labor costs come down. And if all of that growth has strong productivity underneath it, rather than stretching existing resources, then, I mean, the Fed, I think, will keep going, but not have to really accelerate in the face of greater strain on U.S. resources. But look, these are very volatile numbers. We did 0.3 last quarter. We did 2.9 this quarter. We're not going to call a trend change here based on just one quarter, but we do need to watch it. It's a good sign of an upward shift in productivity. You know, check one box for, I guess, maybe tax reform, maybe a rebound in just productivity overall.